nearly a decade of investment experience, I think I've only just really understood which strategy best works for me specifically, etc.
Love it.
So that it does take time, and I think it's important to understand that you probably won't figure it out straight away. Yeah.
Hello and welcome to the Woke Finance Podcast, the podcast discussing all things finance and all things finance related. It's your boy Peter, and I'm with my co-host, my bro Jax. How are you today?
Yes, yes, Peter. I am doing fantastically well. At the point of recording this podcast, I have just come back from the countryside. So, myself and the missus, we decided to spend some time away. Just a few days. We spent some time in a place called New Forest, not far from Hampshire, where yeah, we were in the countryside, very different from how we grew up. As you would know, because we grew up in the same area. I grew up in inner London, the inner city, not very used to being around sheep and different animals, and lots of greenery. But yeah, it was a fantastic experience, very restful, and I'm recharged and ready to go.
Love it, man. So important to, I think you said the right word, recharge, man. And just to take a bit of a break as well. So now good to hear from you, my bro. And a massive shout out to our listeners wherever you are in the world. We appreciate you. We see you. And yeah, we're just always grateful to you. And now, Jax, we're actually just going to use this time to give a shout out to where we've been getting new listeners from. And this area is Tokyo, which we know is the
Jeez.
capital of Japan.
Yeah, Tokyo. Look, whenever I hear Tokyo, I think of one of my favorite movies, or what do you call it? Kind of like not trilogies, but those series, movies that keep going on and on and on. Was Tokyo Drift. I don't know if you remember Tokyo Drift from Fast and Furious. I absolutely loved that movie. Tokyo is most definitely, and Japan generally is most definitely a country that I would love to go and visit. Is one of the few countries I've not actually been to. It is on the bucket list. Absolutely. Welcome to the Woke Finance Podcast. You are here with myself, Jax, and the co-host, Peter. And on this podcast, we talk about all things finance and all things finance related. If you want to know more about what we do, because we are more than a podcast, head over to www.wokefinance.co.uk. That's www.wokefinance.co.uk. And if you want to engage with us on social media, we are on Instagram, TikTok, and LinkedIn as well. So if you search for Woke Finance, you'll be sure to find us. Welcome to the episodes. I hope you are enjoying the episodes and gaining tons of value.
Come on, a shout out to our listeners over there and all over the world. A massive welcome to you, listeners, wherever you are. Now, my intro question to you, listeners, right now. If someone asks you what is the best investment strategy or style, how would you answer? Do you even know what that means? Jax, this is what we're going to be talking about today. And what does that actually mean? Why is that even important to the everyday individual? When it comes to investing. So yeah, first of all, Jax, when people talk about investment style or strategy, what are we actually talking about here?
Yeah, fantastic question. I think a lot of people confuse the difference between styles and strategies. They are kind of different. They can be used interchangeably, and people tend to use them interchangeably. So when we're talking about things like styles, we're talking about things like, are you a value investor or are you a growth investor? Or let's say, are you an income investor? I remember we did an episode on this quite a while ago, a few years ago. Are you someone who invests focusing on things like momentum? Do you use leverage? Are you more speculative? Or, when you're building a portfolio, are you trying to build an all-weather portfolio? Are you engaged in things like shorting, which is, actually going against the market, hoping that things go down? Do you do factor investing or do you use index funds? These are things that people will say these are styles. And when we talk about strategies, we're talking about how you actually implement these styles. So are you a stock picker or do you predominantly focus on index funds and mutual funds and that kind of stuff? When it comes to actually investing, are you someone who prefers to invest using lump sums of money, lump sums of capital? Or are you much more of a dollar cost, pound cost average person, someone who prefers to buy every so often, every month, for example, rather than doing it in bulk? So these are the type of styles and strategies that people use. And for some investors, if you ask them, they will be able to actually very quickly identify which style or strategy they use, and they are more they prefer, kind of thing. And then even some more professional investors, they may have like mutual funds and stuff like that, which will actually say on the mutual funds or ETF key investor information document what actual style they're trying to implement as they manage your money, the people that invest in that fund as well. So that's what we mean when we talk about styles and also strategies.
I love that. And thank you for the distinction between styles and strategies. You're right. It's so often that we can use those two words interchangeably. But now for our listeners, you do know what people mean when they use them interchangeably, or but you're also able to distinguish between the two. And as Jack's correctly highlighted, a few years ago, 5 years ago to be exact, we done an episode called Growth, Value, or Income. And we definitely touch on the different types of styles when it comes to investing as well. So definitely do check that out. That was episode number 5, Jax, 5 years ago. Come on.
Yeah, I remember that episode very well. One of our very few episodes that we shot in a studio.
Yeah,
Very,
yeah,
very
yeah.
interesting. Yeah, I remember that very well. Absolutely amazing episode. I think our listeners would gain tons of value by going back. Even though it was 5 years ago, the principles that we spoke about are timeless. They have nothing to do with dates. So definitely encourage our listeners to go back and listen to that episode, episode 5.
That's it. That's it. Whether you're an old listener or a newbie listener. Now, on the topic of newbies, Jax, and even and it's interesting. I'm gonna move away from the word newbies, right? Because in some cases, Jax, however long you've been investing, you can always find yourself doing something new. You're always learning, you're always growing. So even if you've been investing for 10 years, you might find yourself doing something new when it comes to investing after 10 years. So Jax, I guess how would I was gonna say a newbie investor, but I'm just giving some context. How would a newbie investor know which strategy is best for them?
Yeah, that's fantastic. So I guess you're just asking, how would any investor really know kind of like what is the best strategy for them? And I think,
Exactly.
yeah, if you are a newbie and you're trying to figure out, what your best style is, or you've never, actually thought about it, you probably have heard of a style and strategy that most professionals such as Warren Buffett would encourage you to take, which is to dollar cost average, which is one of the strategies we spoke about earlier, to which is buying every single month. But the type of investment you'll be buying is often a broad-based index type of fund, right? So this broad-based index fund is a well diversified portfolio of assets, and it can be one asset class, so it can be like stocks, for example, the S&P 500, which represents the largest 500 companies in America, or it can also be a multi-asset fund, which means it will not just have stocks in there, but it would have some bonds and other alternative assets as well. So that is probably the most common one, the one that's the most preached, and that's because it almost is a one-stop shop. It is something that generally would work for most people that have long-term horizons, and that kind of stuff. However, the truth of the matter is, I think knowing which actual style suits you would take time. It does take time. It does take some exploring. And even on my own journey, I started more on one side, tried another side, and after, nearly a decade of investment experience, I think I've only just really understood which strategy best works for me specifically, etc.
Love it.
So it does take time, and I think it's important to understand that you probably won't figure it out straight away. Yeah,
But and I guess that's why it's important to actually understand there are different stuff. 'Cause sometimes people might be investing and actually not know what's strategy they are ever implementing and what style is actually more them. They're just investing because they, I don't know, listen to a podcast one day.
absolutely, absolutely. Look, or they've watched some random guy on YouTube who says, pick these 4 or 5 stocks
Mm,
in a very concentrated portfolio, and that's the style that you've gone for, which is a stock picker in a concentrated portfolio. Which I think a lot of people do start that way, because that's what they see on social media, you know. But then as time goes on, they may actually take a more portfolio strategy, which is actually building a portfolio and investing in much more diversified assets, for example. I think the key thing, Peter, for me anyway, is I think people should be open-minded. I think
mm.
people should learn about the different styles and why they exist and who they may suit, and then ask whether it suits them. So, for example, learning about things like dividend investing, even if you are someone who prefers to invest in growth stocks, which means you invest in more high growth stocks like technology, but actually learning about why a dividend portfolio could be very powerful, then you can make an informed decision as to whether it suits you or not. Vice versa, if you are a dividend investor, and you prefer, those dividends to grow, etc., you can also actually assess what it means to be someone who invests predominantly in just growth stocks, right? And understand what the mindset behind that is. I think it's just important to really not contradict yourself, but challenge yourself with the
Mm.
opposite view to see why it exists. And then ask yourself, why is this strategy good and why is this strategy bad? Or who is this strategy good for? Or who is this strategy not very good for? And what are the risks involved in certain strategies? So, for example, shorting. Shorting is a strategy that some people adopt, and in my opinion, I think only people that are seasoned and probably professional should really be considering shorting. Similarly, using things like derivatives, doing things like call options and CFDs and contracts, contract for difference and these kind of things, spread betting, these kind of things, you can understand it and learn about it, but understand the risks involved and why and who should actually be using these strategies.
Love that. I really do. Love that. Love that. Love that. And as I think you said before, like there, and even with your own self, there is gonna be learnings. There's gonna be, mistakes made. I mean, we've done episodes where we've spoken about some of the mistakes that we've done in the last, nearly 10 years or so. But that's where the learning and the richness comes from all of this.
Right, absolutely. And that's why I say for most people, it's important to just get started with investing.
Mm,
You don't want to have too much inertia or inaction where you're over learning or just consuming information and not actually dipping your toes in the water. I think it's really important to actually just get started, albeit with not all your money. You want to get started with a bit of money and then build that experience up. And over time, you would definitely make mistakes. And actually, mistakes is one of the best things we can make in terms of actually learning. I always say one of the analogies I normally give when it comes to making mistakes is, a baby, starts to walk and falls down many, many times before he or she finally realizes how to actually walk. It takes time,
mm,
right? And you have to make those mistakes. But a baby never says, maybe walking is not for me.
mm,
Right? Same way, we shouldn't say investing is not for me if we make mistakes. We are going to make mistakes, but
mm.
we have to make sure that those mistakes are not too costly by, you don't want to invest too much of your money.
Love it, love it, love it. And you briefly mentioned Warren Buffett. By the time of this recording, we've had some live news that Buffett, at age 94, has officially announced that he will retire as chief exec of Berkshire Hathaway at the end of this calendar year. Mr. Warren Buffett,
Jeez.
94.
We would definitely, I think we have to do a reaction video to that shit.
100%.
Yeah, he's an absolute legend of a man. I mean, we've been making jokes about him for how many years? So it's like a full circle moment to actually,
Uh,
we knew this day was coming. It was coming at this point. But yeah, we will definitely make a reaction episode on that.
Absolutely, absolutely. Now, Jax, I guess the ultimate question is, I mean, I asked our listeners, how would they respond if we asked them what is the best investment strategy or style? I guess another or final question is, after, assessing the different types of styles there are, out there, and how would a newbie investor know what's actually best for them? Conclusion, I guess, is what is actually there's a reason why these strategies are here, and one of them has to be the best, right? So what is the best strategy or style?
It's a fantastic question. And if you ask someone, they might be like, hey, growth investing is best thing because growth
Mm,
investing has outperformed value investing
mm,
and income investing for X amount of years. And if you were not in the growth stocks, then you've missed out on X percentage of returns. And then if you ask a value investor, be like, well, no, at this period, value investing outperformed, and value investing is where the real investors are. They've paid so much attention to fundamentals, etc. And the income investors are like, well, there's not only one way to make money, and there's not only one source of return. Capital appreciation means that you have to wait for someone to actually want to buy something off you for a higher price. Whereas
Hmm.
as income investors, we get real cash flow into our portfolio. So I think the key thing is to understand that there are pros and cons for all these different
Yeah,
strategies. And for me anyway, I think the best strategy is twofold. The best investment strategy is one that allows you or best gives you that gives you the best chance to achieve your goals, right? We always talk about investing is about optimizing your objective with your time frame and risk tolerance. And so it really comes down to what you are trying to achieve and why. But secondly, and very importantly for me anyway, what I've learned over the years is actually probably the best investment strategy or style is the one you can stick to, right?
love it.
And that takes time. So there are people that believe, hey, look, I'm gonna be a value investor and I'm gonna do all the fundamentals and I'm gonna read the financial statements. And then they realize over time they don't actually have the time to do these things. So it's really, really important to understand that.
I love it. It's what about what works for you and the thing that you can stick to. I mean, we talk about health a lot. Shout out Dr. Alim who came on. I mean, everyone has their special method of losing weight and losing fat. Listen, if you're advised to lose fat is go boxing every day. Yeah, you might want to do boxing once or twice or three times a month, but eventually, if you're not a boxer and you don't enjoy it, you're not going to stick to it. Some people are going to do walking, some people are going to go swimming, but it's about what actually works for you and your life and your personal circumstances as well. And I actually liked what you said actually before you said something about contradicting yourself. I think essentially, you're gonna have views. These views are gonna be informed by something, right? You didn't just wake up and have these views. They're informed by something. But I think when you look at the other side, it just develops your own critical thinking and it
Yes.
makes you less of a follower and more of actually you're gathering all these different bits of knowledge and then you're able to make a much more informed decision what in terms of what is suitable for your own personal circumstances, not your friend around the corner or whoever, but your own personal circumstances.
That's absolutely correct, and I think one of the things we can do to even uncover some of these strategies, and whether it works well for us as individuals, and whether we are truly value investors or growth investors or income investors, or whether dollar cost averaging actually works for us, whether we want to be stock pickers, is to try them out, right? But I would say, generally speaking, if I'm honest, most people probably want to have a core portfolio,
Mm.
especially if they're just starting out. That core portfolio is something that's probably more automatic and something that works in the background that you don't touch too often and probably allocate 80% of your portfolio towards this. And then with the 20%, explore the different strategies, try new things, see how it goes. And then over time, it will become very clear to you which strategy actually works best for you.
And usually with that 8% in terms of a core salary approach, what's that usually generally what's that tends to be in terms of that 80%?
Yeah, so if you've got a very long time frame, then it could be in one asset class, which is stocks and shares, and it could be in a broad-based index fund like S&P 500, which is the
Mm.
US top US 500 companies, or it could be in an all stock or world index portfolio, which focuses on all the companies that trade in the world, for example. So that's often the core. If you want to be a bit more diversified, then you can go for a multi-asset index fund which has different names attached to them. It will often be cautious, balanced, or adventurous. Generally speaking, for that to be your core, you probably want to go with the balanced portfolio. But to be honest with you, that really depends on your time frame. If you've got 20 years plus, you can go adventurous. If you've got less than 20 years, but more than 5 years, then probably balanced. And anything less than that, you want to go cautious. And this should form the core of your portfolio.
Love it, love it, love it. And before I let you go, Jax, it'd be good to understand. I mean, you've touched on it a bit, but in terms of your own investment journey as well, I can imagine things have changed for various different reasons. But what would you kind of say is your own strategy or style?
Yeah, so I've done all different styles. I started off probably more of a growth investor. And then I dabbled in just index fund investing. But in more recent times, having run these type of portfolios side by side, which is growth and dividend slash income investing, in more recent times, I've seen the benefit of kind of the income dividend investing. And the reason behind that is because I believe by receiving those cash flows, those dividends that come into my portfolio, sometimes even weekly, monthly, etc., it encourages and it induces good investor behavior. right?
Mm.
Which is, by investing in these assets, they're less volatile. And so when we're going through turmoil, I lose less than everybody else, which allows me to sleep well at night. But also, because I'm receiving dividends, and I receive dividends because I own these assets, it, um, there's another layer to go through before I sell something in an inopportune time, which means I know when things are going bad, if I sell this asset, I'm actually losing income. Whereas if I actually keep the asset and I ride down, the waves of volatility, I am actually just being paid to wait, right? And so I'm not saying this is mathematically the best strategy, but I think it encourages and it induces good investor behavior. And I think that's allowed me to become a better investor than I was even 5 years ago when I was predominantly more in growth. That said, I am both, but in terms of actually being a stock picker and picking my own stocks, I have leaned a bit more towards the dividend and income portfolio and less so the growth portfolio, which I've kind of allocated towards indexes.
I love that. I love that. And again, it's just interesting hearing would I say justification, the context behind where you are and why you are where you are, and the journey, and who knows where you might be in 5 years or 10 years as well. But again, this goes back to what you're always talking about in terms of as an investor, you're always looking at your time horizon, you're always looking at your objectives, and you're always looking at the ongoing risks as well and seeing how to mitigate some of those risks as well. So no, that's really, really interesting and really good insight. And I guess for our listeners, hopefully it's some good food for thought in terms of thinking about if you've been investing for X amount of years, what type of investor are you and why? Do you have a do you are you comfortable with the reasons why? And yeah, and if you are a newbie investor, what type of investor do you want to be? And yeah, it'll be interesting to just even hear anyone in our network. Feel free to share your thoughts with us, send through on our social media, let us know. If you got any particular questions about this topic as well, we always love to hear from you. We always try our best to do some sort of an episode on it in due course as well. So do get in touch. But no, Jax, man, really, really useful. Any final thoughts or comments before I let you go?
No, I guess, my final comments are remember that the best investment style is the one that you can stick to and the one that allows you to meet your long-term goals in the best possible way. That's all that really matters in the end.
Love it, love it, love it, man. Jax, always a pleasure. Until the next time, and for our listeners, remember all,
Stay
stay woke.